Welcome back everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it's been a very volatile session as we hope to close out the week on a positive note. The indices have made a recovery even though we had at one point of time turned into negative territory after making a very strong start in the morning. At this point of time, if you look at the Nifty, it's standing somewhere around 0.3% higher. But it's the mid-cap stocks that are actually outperforming today. The Nifty mid-cap 100 index is the top gainers among the major indices. Whereas in the small-cap space, you have seen a bit of selling pressure. Although the index has recovered, the small-cap 100 index now is in the green territory. Earlier in the day, it was the one which was the biggest laggard as far as the major indices are concerned. Overall, if you look at the global cues, they have been pretty strong. The Asian markets had closed on a very strong note, whereas the European market also has started off on a very, very strong foot at this point of time. And incidentally, dollar index has slumped quite a bit, Santo. I mean, more than 1% cut in the US dollar index against a basket of currencies. So overall, it seems like a very, very, ending, starting off with a bang and ending with a bumper sort of a week for the market.
Not really. I think the expectations have become very high now. Unless the market rallies about 1% every day, I don't think bulls like you,
sometimes
you're happy
you can
with
be
that.
spoiled. Sometimes you can be spoiled.
Yeah, but that said, there's no mistaking the clearly upbeat mood on Dalal Street. And just look at the SIP inflow numbers even for August, over 12,600 crores now. It was about less than 12,000 crore in April.
Yeah,
so
just less than 12,000 odd crore.
So in the last 4 months, again, the monthly inflows have risen by close to about 800 crore. And now this comes at a time when FIs have also turned bullish. So it's a double whammy of liquidity support at this point in time, though in the better sense. And also, if you look at till some time back, there was some concerns about whether earnings will meet market expectations or justify the high valuation. But at this point, I don't think anybody is even bothered about what earnings are going to look like.
Interestingly,
it's just brute money flow.
Yesterday I was checking out whether, there has been any sort of downgrade as far as, or any sort of upgrade as well in the Nifty EPS. And if you look at the Nifty EPS from June 30th till yesterday, it has barely moved 1 rupee. It's sitting pretty around that 917 rupees mark. So basically, the entire price up move has been basically a valuation re-rating, not really an earnings upgrade story, which basically tells you that the story around the fact that India probably is getting a premium because of its relative stability in terms of economic growth compared to the rest of the world. I think that premium that investors are willing to pay for it, I think that is reflecting in the valuation.
I'm still a little skeptical out there, CJ. In fact, if you look at most of the earnings commentary from analysts, not from companies, you will see that there's been a slight trimming of EPS estimates.
That is true, but at an aggregate level, it's not showing.
Downgrade in price target. And now probably you will see those price targets again being upgraded. Well,
that said, I think, Santo, we should quickly move on to some of the stocks that were buzzing in trade, and there were quite a few today, especially from the banking space.
Yes, starting with Yes Bank. Now, there are reports that the bank has been able to successfully find a buyer for about 48,000 crore of its stress loan. So it looks like it will finally go to JC Flowers. And
I think they bid about somewhere around 11,000
crore, and of which about 1,600 crore will be paid upfront and the rest in tranches as the ARC starts recovering the money from those loans. Now, the thing here, CJ, is that this does optically help bring down Yes Bank's NPA number, which was quite high, in the vicinity of around 13 odd percent. So this is likely to bring it down to between 1.5 to 2.5%. So that's a big change out there. But again, I get a feeling that probably market may have already factored this in, and which is why you saw the rally which lifted the stock from about 13 rupees to 18 rupees. Today, if you look at it, despite the news, the stock has been under pressure. So those who got in early anticipating this development, probably they are cashing out. Also, if you look at the overall banking space, if you were to play the recovery in the banking sector, I'm not sure if Yes Bank is the best stock to go about it.
I think, Santo, of course, given the fact that Yes Bank, the entire volume of Yes Bank is largely dominated by a lot of speculators, you would expect a lot of them to sell the news, because they were buying the rumor and they are selling the news at this point of time, and therefore the profit booking on the stock today. But overall, for me, Yes Bank remains a long-term turnaround story in this sector. Yes, there are many winners out there. At this point of time, it looks like almost every bank that you touch would end up making money for you. But I think if you're looking for a big asymmetric gains in this market, if you're looking for a big turnaround over the next 4 to 5 years, I think clearly Yes Bank would be probably at the top of the list for a lot of investors. The management has worked hard. The new management that has come in is already looking to focus more on growth than asset quality, because they already have taken care. A lot of steps have been taken to improve asset quality. The most heartening part for Yes Bank, I think, was the fact that in June quarter the deposit growth was very, very healthy. That goes to show that clearly the trust factor with the depositors have also come back for the company or for the lender. And I think going ahead, if we see signs of further acceleration in loan growth for the company, along with what we are seeing with, say, the creme de la creme of ICICI Bank or an HDFC Bank or even an SBI, I think then Yes Bank surely could be moving towards that status that it enjoyed prior to the entire fiasco around its asset quality. So for me, I think you should probably keep aside the short-term movement and look at probably the long-term, picture if you are thinking of investing in Yes Bank.
Very nice to hear you talk about long-term, CJ.
Always, Santo. Wherever I can make money, whether it's in the short term or in the long term. Well, talking about the short term, Zee Entertainment today saw a major uptick in performance. Clearly, it seems like the stock is now gaining traction with investors after what had been a decent amount of sell-off in the past quarter. Now, this uptick has come on the back of the company now inching closer towards its merger with Sony India. It recently got the approval from the NCLT and now is awaiting the approval from its shareholders. Of course, the next big approval would be the CCI's approval. Now, recently news came in that CCI had objected to a few issues, or not objected, but it had raised a few questions, especially with respect to the market share in certain channels that it will enjoy once the merged entity is functioning. I think overall the analyst view is at this point of time that given that the overall market share of Zee plus Sony would be only around 26%, issues around too much bargaining power and too much market dominance may not hold back the CCI from giving an approval, although it may just delay the approval by a few months. So I think overall that merger will definitely go through. Also, if you look at it, Zee Entertainment on a standalone basis, Santo, I had talked about this after their Q1 earnings, that there is expectation that second half would be very, very good as far as ad sales are concerned, because you're expecting the FMCG players to probably increase their promotional costs now that the raw material burden on them has reduced on a sequential basis. So things are looking up, and I would expect that a lot of bargain hunters would be jumping onto the stock going ahead.
Well, yes, true. Now the big thing with Zee here is that advertising at this point in time constitutes the largest portion of its revenues, and it's the assumption here that FMCG companies will immediately start upping their spending. We still don't have any clear indications of that. So that still remains to be seen. Now, the easing of the easing of raw material pressures on its margins. Now, it remains to be seen whether they would like to pass it on to consumers or rather start spending more.
You and I know better that the companies, once they raise prices, they never take it down so quickly.
Well, competitive pressures also come into play, CJ. Let's not forget
that. Maybe the Jio moment of FMCG might be the trigger, who knows.
The other two engines of Zee Telefilm, Zee Limited, basically are that subscription revenues one, which is not really firing at this point in time.
But it has also not deteriorated, right? It has been steady. Throughout the pandemic, it has been steady for the company.
Yes, but till, the uptick, the big kicker there will be once the TRAI notifies the revised pricing for subscription rates, and that's still not come through, because of which we are seeing some pressure there. Now, the OTT part of the business still seems to be doing slightly better, but again that's a very small chunk for Zee at this point in time, which is why I would not be too bullish. And lastly, you have the movie distribution and music segment, which again is doing decent, but not a very big chunk of Zee's overall revenue. Yes. The big driver still is advertisement, and that I think is still to see a clear uptick. So I would rather wait for that for a while.
I think Santo, September quarter you will see that uptick. I'm pretty sure that September and December you will start seeing signs of ad sales coming back for Zee.
I don't think the market seems as enthused as you are. Look at the price movement, and it's pretty much been in that same range.
Can play catch up, to theories. We have seen that in the case of Zomato.
Yeah. Next stock on our watch list is IndusInd Bank. Now, from time to time, the re-rating story again comes up, and I think once again it's the same chatter back at the counter. All the banking stocks have moved up. IndusInd Bank in comparison has not been as big a mover as some of the other, but that overall outlook on the stock slowly appears now to be changing. Some of the brokerages have turned bullish on the stock. Credit Suisse and Jefferies are the ones which have now turned bullish on the stock. Credit Suisse has a target of 1280 for the stock, and Jefferies has about 1330 for the stock. Now, the one thing which was holding back this bank, one was that immediately in the aftermath of the Yes Bank fiasco, you also had certain issues cropping up with IndusInd's corporate loan book, and a lot of which has now the issues have been resolved, and also the retail part of IndusInd's loan book is largely the high yielding auto loans, and now that the outlook on the auto sector is also beginning to have improved, you are seeing all those supply disruptions, especially the chip shortage issue now being resolved to a large extent. I think things are definitely looking up for IndusInd Bank, and this is a stock I would keep on my watch list.
Yeah, I think Santo, no gripes there. Clearly, this is one stock that I also like because not only is the auto sales part as well as the corporate part, but the corporate loan book is something very interesting for IndusInd Bank because it will also be beneficiary of the capex cycle that a lot of people believe that is now underway in the Indian economy. Morgan Stanley, earlier this week had come out and raised their target price for IndusInd Bank because they believe that FY24 and FY25 is when you will see that big re-rating, the second leg of re-rating coming in for banks, and clearly IndusInd Bank would be a big beneficiary of that. Well, talking of re-rating, I think one stock that has seen a decent amount of re-rating and has flown under the radar in this rally is for me Paytm Santo. If you look at the stock is still finding a lot of buyers out there in this market, despite what has been a very spectacular comeback so far from the 52-week low it had hit back in June. The recent performance update that has come out for the month of August as well as July and August combined has been again very strong. If you look at disbursements, they have largely grown almost 484% on a year-on-year basis to a combined value of about 4,517 crore in the month of July-August versus July-August of the year ago in the previous year. Apart from that, of course, their point of sale devices, their voice boxes as they call them, that is clearly gaining traction, and the company's management has said that this is allowing them to upscale a lot of their products, upsell a lot of their products, including loans to some of the merchants out there. So overall, I think, Santo, there is now increasing understanding that earnings going ahead is likely to be very strong for Paytm, and clearly with the festive period coming in, remember last year the festive period was among the best periods for Paytm, and with the festive period now coming in the second quarter and third quarter, I think you could see good amount of earning traction, and therefore risk reward being already attractive because it's nowhere close to the highs that we had seen at the time of its listing. I think a lot of long-term investors might just get into the stock.
Well, CJ, I take your point on that strong July and August performance. Now here's the thing, the stock did rally quite sharply, no disputing that, from its lows in June, and it went on to hit a 6-month high. But after that, if you see, the stock once again has been struggling over the last month. It's really gone nowhere, and now despite the fact that now the company has said that July and August were pretty good months, stock has not really reacted to that. So here's my take on the stock, CJ. I think maybe the worst is over for the stock. The lows that you saw of about 500, you may not see that again, but the upside, now that's the big challenge here. From time to time the company keeps saying things like we are now better placed to they give deadlines for when they will meet certain targets, but I think market now wants to see some meaningful improvement in numbers. They would rather wait for that.
We have already seen that in June quarter, and the market reacted pretty well after that. So I think now it will be every quarter as the earnings come out. I think you will keep on seeing that.
So the big gains, if you ask me, CJ, that is something which I am a little skeptical about.
This will be a patient game.
You are talking about patience, CJ. Oh my God, what's happening to you? Long-term patience.
I think till the March quarter, if there is enough evidence by March quarter that Paytm can achieve that profitability that they've been talking about by September quarter FY24. I think if March quarter shows that they're clearly on their way, I think that is when you will see that massive upgrade, and maybe you might see Paytm now getting into closer to the territory of its IPO price going ahead.
Well, things usually the way it works with the market is, now I'm wrong here when I say that I would rather wait till things start improving. You almost get a sense from the market.
Yeah, that is what I'm trying to say.
Well in advance, even before the numbers have started to improve, you will see
but Santo,
market reacting.
You would expect that after a 70% rally, if you have made 70% in 3 months, 4 months, you would expect some bit of consolidation in the stock price. That is generally how in individual bull markets or bull markets in a stock, individually stocks work out to be. You will see a big leg up, then you will see a period of consolidation. Then either things will not work out and you will see a breakdown, or things will get even better and then you see the next leg. So I think probably at this point of time, market is just taking assessing how it is going, and probably after this leg of consolidation, you could see another leg of re-rating.
Well, with that last stock on our watch list this afternoon is Raymond. Stock has been quite volatile over the last few months, but once again, it seems to be headed to make a new high. Renewed buying interest, and according to market charter, it's largely coming from the HNI circles. Now, the first quarter performance was quite strong. In fact, it was the strongest ever performance for the first quarter. And also the commentary, management commentary has been pretty positive. Today again they were on the CNBC TV18 channel, and they have said that despite elevated cotton prices, the shirting segment has not really seen any kind of pressure. They are getting strong demand from the primary dealer networks because of the wedding season, and the export pipeline is also pretty strong, at least till March 2023. Besides that, there is a realty play also in Raymond's. They are expecting about 2,000 crore from their Bandra project over the next 5 years. So things seem to be falling in place for Raymond.
Well, Santo, clearly, I mean, traditionally we are used to, two wedding seasons in India. That is around the month of May and June, and then around the month of December and January. But this time around, it seems that the entire year is the wedding season as far as India is concerned. So clearly, I think Raymond is benefiting from that. I think the management have also touched upon the export side of the business as well, and they had indicated that probably that business will probably stay robust. But I have my doubts given the prospects of a global slowdown that everybody has been talking about, that has been the talk of the town globally. I think that export side of the story could suffer a little bit of a dent going ahead. Apart from that, of course, technically, I think there is a possibility for some bit of pullback in the stock. A lot of the momentum indicators at this point of time seem to be in the overbought zone. So from a technical point of view, clearly there could be some profit booking, while fundamentally things are clearly looking up for the stock going ahead.
Well, and what do we, before that, let's quickly catch up with the market at this point. I think a good bounce back from the day's low, CJ.
Yes, Santo, I think if you look at the Nifty after almost falling 0.1%, to the day's low, I think right now we're sitting about 0.2% higher, almost 17,827. So we crossed that 17,900 mark, and that ended up being the trigger for a lot of people to book profits, especially those who probably would have bought around the 17,500 mark in the recent correction that we had seen. So I think overall, I think market would be happy with the fact that we have at least been able to sustain above the 17,800 mark and close above that. But the story clearly is in the mid and small cap space. The Nifty mid cap now sitting above the 32,000 level, where the Nifty small cap index is also inching lower, although it looks like it's going to end probably flat or in negative territory. But overall, this entire week, now it is the 11th consecutive week, Santo, in which the Nifty Small Cap 100 is going to close in the green or with the gains. So overall, the market is quite healthy. Sectorally, only financial services and Nifty Media is the one, and realty, of course, are the three sectors that have seen losses. Otherwise, everywhere else is green.
Well, and what are we keeping an eye out for, CJ?
Well, Santos, several Fed members will be speaking later in the evening, so that is something, all Fed commentary always, decides market direction. So that will be something that market will be clearly watching out for. Apart from that, on Monday, India will be reporting its August CPI data or retail inflation data, along with its July industrial production data. That will be a good high frequency indicator that the market will be looking out for. And lastly, on Tuesday, you will have the US retail inflation data, the August retail inflation data. Now remember, this will be the last inflation data before the Fed meets later in this month to decide its monetary policy. So will be probably the most deciding factor as far as near-term market direction is concerned ahead of that Fed meeting later this month.
Well, that's all that we have in this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below, and have a happy weekend.
And as usual, guys, keep following us on the social media links that you can find at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again Monday morning at 9 a.m. Till then, have a great weekend.